I'm Tom Selzer from Livewire Markets, and joining me today is Sam Garitano from Brookfield to discuss the Brookfield Infrastructure Income Fund. Thanks for joining us, Sam.
Thanks for having me, Tom.
If you just mind giving us a quick overview of the landscape of the infrastructure sector right now.
Yeah, when we think about just infrastructure, it's becoming more and more relevant to everything that we're reading or talking to clients about. Historically, infrastructure was about private capital filling the void of a funding gap where traditionally governments were, I'd say, the investors in infrastructure. More and more common, you were seeing private capital fill that. But now when you just think about what's going on in the world, whether it be digitalization, us as individuals just needing access to data faster, being heavily reliant on our phone, and now you add in AI. And then when you think about AI, really just the key components to that and being the bottleneck, potentially being power, but other emerging technologies to kind of really provide these solutions at scale. And then particularly in the headlines today, I'd say a lot of the themes of reshoring, whether it be critical industries such as semiconductors, energy security in certain countries around the world, or just supply chains. And really when you think about all of those at the epicenter, it's really infrastructure. And that's where we're focused at Brookfield. And when we think about the opportunity set, it's how do we invest in these projects that we can improve capacity, improve their operations, so our everyday lives as individuals is improved. And if we do our job right, you don't necessarily have to think about that good you order from Amazon, how it gets to your doorstep, how when you travel around the world, you have 5G connectivity wherever you are. When you wake up in the morning and you turn on your light switch, how did the electricity get to you? How did it get powered? That's ultimately what we're investing in Brookfield and trying to do it on a scale that very few others can.
Do you mind going into a bit more detail on how you're capitalizing on the current dynamic there?
Yeah, I'd say, one, we believe we're in an infrastructure supercycle. There's billions, if not trillions of dollars required in all the industries we focus on. Ultimately, we're value investors. We don't want to overpay for an asset. We don't want to participate in a crowded trade. We're really thinking about where can we invest that we can drive long-term value in themes or investments for 10, 20, 30 years. We're probably a little bit longer term of an investor than some of our peers. And so ultimately what we're looking to do is buy great businesses for value, where we can look to enhance through an operations-oriented approach, the value of those businesses for the long term. And ultimately what that provides to our investors is an outcome that they would want from infrastructure, where you get good risk-adjusted returns and many of the other portfolio benefits from infrastructure.
And so do you mind maybe bringing this to life with some examples from your fund?
Yeah, would love to, Tom. And so first, when we think about the theme of maybe digitalization, we really think of this as telecom towers, fiber networks, data centers. Recently in the fund, we closed on a portfolio of operating data centers in Europe. These are modern, state-of-the-art data center campuses. Each are the largest campus in their respective markets. And really what we're doing is we're operating these data centers on behalf of the large hyperscalers, where the significant amount of revenues come from companies such as Microsoft, Google, Amazon, and Meta, really some of the best companies in the world that you want to invest in. But beyond that, when we think about the theme of maybe decarbonization, and really again about power, maybe not talking about a specific example, maybe the power of Brookfield's platform and really how BII benefits from that. Recently, we've been in the news a lot for announcing these strategic partnerships with some of the large hyperscalers I just mentioned on the data center side, where those companies, the hyperscalers, are fully in the AI race. What is going to be the bottleneck to that? It's the access to the power to bring all these data centers online. And so recently we announced an 11 gigawatt virtual power purchase agreement with Microsoft. And then we also recently announced a 3 gigawatt hydroelectric partnership in the US with Google. Really a sign of just the scale and operating expertise that Brookfield has to deliver these projects on time, on budget, to meet the demands of a lot of these corporations today. And then the last theme, deglobalization, which is really reshoring. I'd say we've been talking about it for some time at Brookfield. Today, I'd say a couple years ago, if we were having the conversation, Tom, it probably was like you gave me a blank stare. Today, everyone's a tariff expert, at least in the US, we think we are. I think critical industries is my favorite example in the fund. When Intel was looking to reshore semiconductor production in the US, looking to build new fabrication facilities, we actually structured a JV to help them build 2 new semiconductor foundries in Chandler, Arizona in the United States. And that total JV is a $30 billion partnership. And I think that's ultimately really the power of what we're offering investors through BII, is that you're getting access to these large-scale, capital-intensive projects in a very simple structure. And that's why we've continued to see very strong demand in the strategy.
Why do you think investors should be considering the Brookfield Infrastructure Income Fund right now?
Yeah, the power of Brookfield Infrastructure Income, or what we refer to as BII internally, is really the power of compounding. The way we've designed this portfolio, and we expect it to continue to grow, is we've built a portfolio that provides a very stable, predictable return stream. Month over month, year over year, you should kind of have a very narrow return band where the power is compounding. And where if we can get you a return and then you hold this investment for a number of years, you should have a very good outcome, equivalent to maybe what you may own in other asset classes or even the public markets without the volatility. And so when we just think about BII or Brookfield Infrastructure Income and kind of investing in it, we don't think you necessarily have to time the market, because the way we've designed the portfolio is we really expect steady, predictable growth. Most investors should have a very good outcome when we think about investing in it.
And that long-term strategy, is that, I suppose, key to how you drive the growth and create the value for investors there?
Yeah, so I'd say a couple different ways. First, at the investor experience level, it's really through building a portfolio that is diversified, that has global exposure in developed markets and high quality businesses. From an underlying perspective, we're really looking to invest in assets that on day one provide a stable, predictable cash flow stream. So that's the income we can distribute to investors. But then longer term, we're looking to try to drive capital appreciation or growth, I'd say through two verticals. The first is really embedded growth. So that's capturing the annual inflation escalators. Maybe there's some linkage to GDP growth. And so naturally, as the infrastructure is used more, we get paid more. Then the last leg, and I'd say one of the key advantages to Brookfield, is bringing to bear our heritage as an owner and operator. Typically when we invest in infrastructure assets, these are high margin businesses on day one. We don't come in and initiate a cost-cutting exercise. We're really looking to grow the top-line revenues, and there's a lot of different tools in which we can do that.
We've gone through some of the opportunities there, but what do you say are some of the bigger challenges facing the sector right now?
So I would say when we think about the sector today, the biggest risk is jurisdiction risk. We always look to invest in stable, predictable regulatory regimes. You don't want to invest where someone changes the rules on you. And so we've been very disciplined to how we think about entering new markets. We're in 30 countries around the world today. Tom, hopefully I'm back here next year and we talk, we're probably still in 30 countries. Particularly when you're investing in assets to provide an essential or critical service, you want stable regulatory regimes. I'd say the second is making sure we're not inappropriately using leverage. There's a couple of issues happening in the infrastructure universe today where there's a couple of assets that have been over-levered, and that's providing a negative experience or outcome for the investors in those projects. And then the last is, I would just say, we never have chased government subsidies. I think that's particularly relevant in the US today, and when we think about BII and the investments we've made, we're predominantly insulated from it. We're not concerned because we weren't chasing those tailwinds. Maybe we were benefiting from it, but that was included in the upside case. And so when we think about the portfolios we build, again, we're looking to provide investors with a very stable return stream that just will allows them to compound month over month. And that's really the beauty of the structure, is that investors can invest and we take in subscriptions each month. And and I think that's why you're seeing more appetite for these open-ended evergreen vehicles.
You mentioned the regulatory uncertainty there, but how do Brookfield assess and mitigate other risks, whether that's political, environmental, economic, anything like that?
I would say it's why we have a local boots on the ground model. It's not me flying from New York in a suit and tie to different countries and trying to speak the local language and build relationships. We have dedicated teams on the ground that are building relationships with the governments, with customers, with the regulators to really ensure success in those markets, both from a sourcing, from an operating the asset, and then ultimately when we think to exit. We think that's really a key to success, is having that global reach with local presence.
And what aspect of the sector are you probably most excited about at the moment?
Look, I'd say we don't have a favorite child in terms of the sector. I'd say where we're seeing significant growth is maybe the domino effect of AI. Everyone is talking about data centers today. What I think a lot of people, if you just take a step back, and in particular with BII, it's that if you think about how is AI going to play out, it's not just data centers, it's power. And the power, though, is not just renewables. We invest in wind, solar, we also invest in battery, we invest in nuclear, we invest in conventional energy sources. All that power is going to need to be transported to these data centers. We've been investing heavily in midstream. We've been investing heavily in electric utilities, which are seeing significant growth opportunities. And then as AI plays out, you're going to, today we're talking a lot about training, inference is going to play out. I'm going to use it on my phone wherever I'm in the world, and that's when you're going to really see the proliferation of AI, and you're going to need densification of networks. You're going to still need investment in fiber, you're going to need investment in more towers. Those are all areas that we've been investing behind. And then I think what's to come is you're also going to see more investments in just the physical infrastructure of artificial intelligence. Most data centers today, when they've been built, have really been for cloud. And you're beginning to see these large 1 gigawatt type centers where I think very few players can offer a fully integrated solution.
And how much of a presence and investment portfolio do you have here in Australia?
Yeah, we have a significant presence in Australia at Brookfield. Our infrastructure group has a very large team here. And when we think about the fund, we have very large investments actually here in Australia. One of the investments we made is in AusNet. This is one of the regulated utilities in the state of Victoria. Provides the electric transmission, electric distribution, a gas distribution. As renewable power build out is happening in the state of Victoria, they're actually connecting that new power generation to the grid. Last year, Brookfield actually took private Neoen, one of the leading renewable power developers here in Australia. And then there's several other investments that are near term that we actually expect to close soon. And so we have a very large allocation to Australia.
And finally, where can investors get more information about BII?
Yeah, the best place would be to go to our website where you can get more information about the fund strategy, the holdings we have, some of the structural details. And you should be able to find everything on the fund there.
Great. Thanks for joining us, Sam.
Thanks for having me, Tom. I really having the conversation and talking more about BII.
Thanks for tuning in. Make sure to check out our YouTube channel for more great videos.